Patrick Karim from NorthstarBadCharts.com is back once again today to talk about the technicals in the technicals. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Patrick Karim, welcome back to Metal Money. How are you doing?
Hi, Patrick. It's an honor again there to be on your show there. Really appreciate your time.
Appreciate your time as well. Glad to have you back. So let's revisit some of our past interviews here. When we last spoke in late July, we discussed the point and figure charts for silver and gold. And at that time, the chart for silver had the O's pretty close to that 10-period moving average. Now, with the latest dip in the silver price to under 22, has it gone under that 10-period moving average? And has your outlook changed based on that latest price movement?
Patrick, it's over. It's completely broken. It's over. No, it's not that dire, but it did go below the 10-period moving average. It's like in chart trading there, you have like multiple vantage points, viewpoints, right? There's like, let's say the higher time frames where the price action could be above an inclining 3-year moving average, which is a long-term meaningful uptrend. And within that uptrend, sometimes there's a greed, like the price stretches far away from it. But after that, there's people who want to take profits, and then the price action goes sideways, lets the moving average catch up. Or the price action could even have a smaller bear, a rally downwards towards that higher time frame. And on that point and figure chart, it was a daily point and figure chart set with a block size of, I think it was 70 cents. So every time we had a daily close where silver closed 70 cents lower, it added a O below the price action. Do you want me to show you? I could just share my screen and so here I have the silver chart. I'll just pop up the point and figure. I'll put it here on the daily. I think it was the daily. It could have been the 2-day chart. And then I'll just remove my Ichimoku cloud. I'll remove that 36 moving average. And essentially I'm trying to rebuild. Here I'm going to put the 10-period moving average. Like that. Here's the 12. So I'm not quite sure exactly where we were, but I think it was somewhere like here. And I think I had a beautiful arc, a long-term arc. And now when it closed below 10-period moving average, the case scenario was something like this, where the price action would need more time to fluctuate, to try to base before regaining that 10-period moving average and then to go up. Because before you go up to these all-time highs, you'll have to be above a 10-week or that moving average. In this case, the 10-period moving average, you'll have to be above it, right, to have a chance to consolidate and then explode upwards. So right now, when I see that, that means the momentum, the trend on the shorter time frames is down. And the first thing I look at is where's my previous, what I call a wall, previous resistance turns support. So wherever the X's refused to go up, and then it went down and went up. As soon as you close above an important breakout line, this is everybody knows it's the breakout for silver in 2020, that becomes important support. So what the price action is doing right now, instead of just continuing above the 10-period moving average like we had here in 2010, 2011 before melting up, the market's telling us no, something needs needs more time to digest the price, and now you're looking at where could you bounce, where could you support. So when I see that, I see now we're broken down. If we hold that 2072 line, and I think we got really close, right? We got to 2168, that region. We're going to start looking at the smaller time frames to see where we could bounce off here and then try to recapture that 10-period moving average to have another chance eventually of breaking out above that 28 level. And you got to still notice, even it's going down, as soon as it turns back up, low, higher low. So what's going to have morphed into existence will be higher lows on that chart, just like we had here. Those 1998, 2004 lows. Then after that, it went all the way back down in the GFC crisis. But that was actually a higher low, which is quite constructive if you want to build off that to go upwards.
All right. Thanks for showing us this and clearing it up a bit. And you shared the Fibonacci Circles for gold and silver on Twitter recently. Can you give us an overview of how these circles work? And Are they more informative than Fibonacci retracement levels? And how do we read the support and resistance levels?
When I did the Fibonacci circles, it's Fibonacci. Everybody knows it's the mathematical sequence that you see in nature all over. It's in the snails, in their shells. It's in leaves. It's in fractals. Those numbers. They're math and science and nature. Like it's all linked. And us humans, like being of we're subject to those numbers, right? Those mathematical numbers through our buying, through our selling, through our actions. And essentially, even Fibonacci, even on the highest of time frames. So here I have the silvers yearly defined. So these are yearly candles. And my reasoning was, I want to see the price action of silver. So this was March 9th. It saves the annotations as I did them back when I did that chart. As a chart trader, I want to see the reactions to certain points. So let's say here I think I'm estimating that the center of my Fibonacci circles, my rings around here, I have a reaction point here where in 79 I refuse to close above. Here in 2010 I refuse to close above. Here I have a wick going up that's testing this the 1.618 extension Fibonacci circle. And even here, so now as these circles are concentric and they respect the mathematical sequence, you could see even here the outer ring tested, even here in the lows in the mid early 90s tested again. So you know that the price is reacting to them. Here, refuse to close above, I have a wick. Refuse to close above, I have a wick. It adds confidence that wherever this circle is projected in the future, there's a chance that the price action will react to it. Even here, you could see back in the 1970s, it did the same thing. So when I did this chart, I said, okay, something could be happening here at this circle. We could have some type of resistance trying to drag down back the price. And as a price action happened to move on, the price action did still attracted to that inner circle. So as soon as we're able to detach from that inner circle, the price action, the next target would be that outer circle. I don't know when in time. It all depends when we detach, but eventually that target is going to be the next ring of resistance as defined by the Fibonacci circle.
Okay, and then for your gold Fibonacci circle chart, how are the baselines set?
I was looking for an important place where there's multiple touches reaction. So that's probably like the hardest part, but the more you see these fractals repeating and over, you've seen these arcs, you've seen where the price action goes down, then goes back up. You know it's reacting to sellers coming in. After that, when there's no more sellers, then the price has corrected sufficiently as a retracement. It starts slowing down. Then when it goes back up, it's respecting that arc geometry. So once you've established that, then you have the arc, then you apply the Fibonacci extension circle tools, and then it just builds those rings, those layers going outwards. And you'll see that the price action reacts to important levels. The price action starts, reach that Fibonacci extension 3618, price action goes back down, previous resistance is now support. It tests it, gets attracted to it until it's able to detach. And then after that, it moves on. I've here the same thing here. I have this beautiful, the base of the 95, I think, to 2004. It just almost to perfection. It tracked that inner Fibonacci circle. And after that, once you broke out of it, then your targets are the ring. So the ring is giving you a target in price and in time. And of course, you could add just an angle of ascent to give you a possible trajectory, right? So the energy of the price is going at a, let's say, 43-degree angle. And during all of its bull rally from 2000 to 2011, gold has, on occasions, 1, 2, 3, 4 times, it's always been attracted to that 43-degree angle. So it kind of gives you time and price objectives. And even here, I have another circle that was built. And when you do the extensions, you see that in the past, that circle had previously served as support. Even if you didn't realize it then, it was actually serving as support. But since now the price action is trending upwards, same thing again. 43 degree angle, touched it once. We've detached from that inner ring. So just like we had in 2004, as soon as we detach, went a little bit sideways, and eventually we'll get attracted back to these spots right here. And that's how I came with about a 6,200. So if ever we continue on this trajectory, by the time we get to this outer ring, to that fib extension 361, and I think it's like about 2027, gold, that's its target right here.
Patrick, what does your gold chart tell us about gold's journey to 2,700?
Well, so that's like the classic thing, right? When and the danger of as a chart trader is putting out targets is people imagining, because we always humans think like linearly, like what's the fastest spot from A to B, right? How many kilometers till we reach the in-laws? But we forget that you go up a hill, left, right. There's detours. The kids want to go bathroom break, etc. So if you want to know past behavior and to see how that trajectory could happen, is as long as you model or you respect the type of fluctuations, getting close to that incline and then detaching and then coming back up. That's the type of trajectory you could imagine. And any important line, I have like a multitude of charts. Whenever you have breakouts, price action always wants to retest important levels. So let's say here's a 6-month chart for gold. Just like here, we had an important breakout for gold on the 6-month chart, even the 1 year. Look, for the past 2 semesters, gold has come to retest it. But as long as you don't close below 1675 on a yearly basis or on a 6-month basis, you're still in an uptrend. And as long as this continues on until we reach, let me draw a trend line, keep it super simple. And as long as you keep respecting that rising trend line, then you can imagine fluctuations, right? And the more you're stretched, the more it's time maybe to take profits, or people do take profits. Then as soon as you hit that trend line and you bounce on it, then you know that's a lower risk, high reward entry. And all the way you ride it until the trend says, okay, that's it. We've closed below that important breakout line, and that's not a good sign. Or we close below that rising trend line, we could be in trouble. So those are like all the type of elements there that you have to take into account there to try to ride a wave, a bull era for for silver or gold.
Patrick, you've done a tremendous amount of technical analysis on different charts for gold and silver, and they are the arcs, the ratios, the point and figure charts, harmonic analysis, and the Fibonacci circles, etc. If you were to put the signals in these charts together, do they point to a consistent estimate in the short to medium term regarding a high in gold and silver in the next few years?
In the next few years, okay, so this is pretty much a situation where gold and silver are in a bona fide uptrend. Gold should have never closed below its 18-month moving average, and I think it did it in the past quarter. Silver, it should have stayed above its 10-period moving average, like we saw on the PNF chart. So right now, that's creating some short-term bearishness. So to start seeing that on those higher time frames, some pullbacks and even dips below those important moving averages, that means on the short term, there's been some selling pressure. Since we did those highs, we've stalled. Right now, the gold, I've done a few charts where gold and silver are bouncing on. Let me see, I have it right here. Gold and silver are bouncing on important arcs on the 8-hour time frame and the smaller time frames. Any important rally right now that we have in silver and gold, we want them to overcome the all-time highs. We want the bull trend to resume like in the following months, in the next rally. If there's a rally that fails, that we're not able to overcome 1900, or silver is not able to overcome $28, then we have to consider that we could be in for several months, several quarters, or maybe there's some projections for that the highs could be in, and we'd be dwindling slowly towards in those cycle analysis, like for 2024 lows for the precious metals. So this is like it's go time for the precious metals right now because you don't want them. The longer they're staying below those important long-term moving averages, the more they're susceptible for sell-offs. Uh, the momentum is not helping them, so any selling could be accentuated to the downside. It's not somewhere where strategically it's a good time to enter. You want to wait until we really start hitting a bottom on the smaller time frames, just like this chart here. You want to start building a base and then start climbing up all the wall of worries, resistance level by resistance level, all the way up. And once we clear 28, then we could breathe. But until then, any of these rallies on the way up, like you see on this 8-hour chart for silver, if ever this arc breaks to the downside, then it's at the danger of slipping and then having bear market rallies that get sold into, and just like a sideways move, downwards move above probably 21, where you saw that was a critical breakout line, until it's able to digest all the selling that has to digest and then turn back up.
Okay, thanks for clearing that up. And I guess one thing to always remember is the price action does not move in a straight line. We're going to have ups and downs in between. Patrick Karim from NorthstarBadCharts.com. We appreciate the time and hope we can do this again soon.
I appreciate you calling me, Patrick. Thank you very much.
There you go, Patrick Karim from NorthstarBadCharts.com, explaining the ins and outs of the lines and arcs to tell the story of probabilities. As always, please leave your thoughts in the comment section below, and remember to keep it liquid, keep it real, and I'll see you on the next episode of Metal Money.